Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Friday, October 28th, 2022. Hope you're having a great week so far. We have a lot to update you on. There's been a lot that has transpired in the last 7 days. I feel like I'm saying that each and every video that we come on here, but really the speed of information moving around this market continues to pick up. We have some news on the Fed, we have some news on earnings, and we have some news on the broad market and economic technical. So let's get right to it. So the last video we did was Friday morning, the 21st. And shortly after we finished recording that video, there was some very important news that was broke by a reporter that is very close to the Fed. They call him the Fed Whisperer. And that set the market off on a very good path that day, sent the markets flying higher. And we've been rallying since. And basically what that news was Nick Timiraos, Wall Street Journal, who is the designated Fed whisperer. Anytime the Fed wants to leak something to the media because they purposely want to put a story into the media, he is the guy they go to. So last Friday, he basically introduced the idea that the Fed is getting prepared to pivot, right? The pivot, the illustrious P word, we've been talking about this for a long time. The Fed is set to raise rates by 75 basis points on November 2nd, which is widely expected, and then debate the size of future hikes after that. So kind of giving a hint to the fact that we're getting close to that terminal rate, that end point that the Fed wanted to get to, or maybe they're not going to start cutting rates, right? Inevitably, or I should say initially. But what it does mean is they're going to pause at that level and reassess. So that's something that we've been really speaking loudly about, that is necessary, because they have to allow all the tightening they've done. They have to allow the lag of monetary policy to work its way through the system. So that was the first nod that we got, that the Fed is starting to consider the pivot, right? We're getting there. They're starting to see global central banks around the world pivoting as well. Then, just yesterday, Thursday, October 27th, Fox News business reporter Charles Gasparino reports that economists at BlackRock are telling financial advisors that they work with that they expect pivot language at the next Federal Reserve meeting, when they expect Powell to announce 75 basis point federal funds hike, followed by two smaller ones to get us to that terminal rate. Okay, so the moment that the Fed at least hints, and maybe this is a hint, or the market is trying to read the tea leaves here, that the rate hikes are going to slow to a stop, it is going to be a market-friendly event, and that's basically what we've seen so far. So now, when we look at the market over the last week, right, this is where that news broke last Friday. We were set to open lower. The market's been moving higher since then. Run into a little overhead resistance. When we zoom out a little bit again, right, we put in that kind of capitulation low for the time being. When we get that really bad CPI number, that was on the 13th. We opened 2% lower. We closed 2.5% higher, so a big move intraday, and the market's been trying to build on that since then. Now, earnings season. We're in earnings season, and this week we got a lot of big earnings reports. Now, if I had told you ahead of time that Microsoft, that Google, and that Amazon, or let's call them Alphabet, and Amazon were all going to miss their earnings and the stocks were going to take a beating, I'm sure you would assume the market would take a beating too. And yet here we are. We heard from Microsoft and Google on Tuesday. Both of those stocks saw big declines following missing revenue and earnings expectations. And then last night, Amazon taking a big hit on less than expected, or a below consensus forecast for the holiday season. So again, right, the macroeconomic environment is starting to put some pressure on these companies. It's coming through in earnings. But nonetheless, given those big drops by some very big market components, when you look at the size of those companies, I think there's a case to be made about the strength of this market here, right? Folks, this market, this is last Friday, so this is where we started the week. If the market goes flat to higher today, we're closing this week with a gain, with 3 of the major 4 companies reporting not looking so good. The one standout, Apple, right, was definitely the best one of the 4, hit their revenue and earnings expectations, and Apple doesn't issue guidance. They haven't for about 2 years, so it kind of takes that one component out of the equation. But nonetheless, markets are trying to work on something here, right? We were looking for that double bottom off the June low. We went a little below, puncture below it, right? Run all those people out of the market that said that they would get out at this level, and a rally is starting to build. Now, this rally could fail like the others, but the earnings that carry us through in the next 2 weeks will be very important. And of course, November 2nd, that Federal Reserve meeting. Not the decision they make, because we know what's coming, but the language that they use about future interest rate hikes. Let's take a look at a couple other things quickly. This was shared by someone on Twitter, Ryan Dietrich from Carson Wealth, looking at October 28th, which is today, happens to be Ryan's birthday. That's why it says it on the chart. But when we look at historical performance in the stock market, it actually tends to be one of the strongest days of the year. So really not much to take from that. We'll see if that holds true today. Seasonal trends, but October 28th tends to show outsized performance. And then we've been having a very huge October, right? So we're looking at the markets came into October. Everybody expected a crash. Kind of feels like July all over again, right? Everybody was sure it was a crash, was imminent, and here the market is up 11.5% so far for the month of October. So today being, Monday will be the last trading day in October. So the curtains are not down on October just yet. But when we look at previous big months, singular month returns, right? Double-digit returns going back through history. We also look at what the performance looks like 3, 6, and 12 months later, and you see that we have overwhelmingly positive performance following these big months, right? 80+%, 70+% of the time, 3, 6, and 12 months out, markets are significantly higher, building off of these big months. So again, a bottom has to start somewhere, folks. I'm trying to adjust the camera here. I got a little bit of a shadow on my face. Sorry about that. But bottoms have to start somewhere, and we're starting to see that the generals of the market, the big cap companies, are starting to take it on the chin, and the market really hasn't even blinked. Okay, so that's something to keep an eye out. Can the market show continued strength in the face of big tech weakness? Right, Apple again being that lone standout with a very solid report, as we would have expected. So if you have any questions, reach out to us. Always here to talk to you about anything that's on your mind. Markets are continuing to work through this process. It's choppy, it's volatile. It's certainly not easy to get through, but we will get through it together. Reach out to us with any questions. We hope you have a great weekend, and we'll see you back for the next Heritage Market Update.